Okay. So as I was saying, today's session is going to be pretty short, very short. We are just going to do a recap of what has happened on Euro USD, GBP USD, and DXY. And we are also we're not looking at gold, we're just looking at the easy things or the most popular pairs, that everybody is involved in. But 70% of this session will be about your thoughts, your mentality, your trade process, and the discipline of waiting. You understand? For one, now you may think the only thing you don't know or what you're lacking is knowledge. Yeah, knowledge is there, but some kind of emotional control. You will come to find out that you will or you are lacking there. And this video, when that tends to happen, by that time you would have known a lot of technicals. You would have even been taking trades, making some money and all that. And then you will come to realize that you are inefficient in some certain areas, emotionally, psychologically. And before that time comes, I will address it now. Look, bro, when you start to hold your own in Forex, all right? When you start to hold your own, when I say hold your own, I mean when we don't have sessions anymore, all we do is just probably share ideas. We talk about one pair, talk about fundamentals, the economy, when you know what you're doing and how to follow through with your processes. On your own, there is something you might battle, all right? You may be free to tell me you may find it that you want to battle it on your own, and that is emotional intelligence and awareness. Okay, if you know that you should not be trading, it takes emotional intelligence to not trade. Do you understand? There are times I know I should not be trading, but I still find myself taking a trade. And when I lose, it's more like when you lose, you now tell yourself you are not supposed to take this trade, but you just cannot stop yourself. It is indiscipline, one, but it doesn't just start off of nothing. It is emotions. In the coming weeks, as we move further, I will be sharing you some not technical videos, psychological videos that already explains what you will go through. You have not started going through it too. That explains what you will go through, how to pivot it before then. Because there are times that we blow an account, then after I blow that account and I'm going through YouTube, I'll now see a video talking about psychology, emotion, that talked about exactly what I did to blow my account after I have blown my account. And then I start regretting, if I had seen this video before I blew this account, I would not have blown this account. Alright? So you have to go through this process. Look, I went through a ladder, alright, for you to get to where I am. You have to go through that same ladder. The difference is that the speed at which you will use to climb will be different because now you are not figuring out your next steps by yourself. You understand? There's somebody who has already taken these steps. So you know, put your leg, put your leg, put your leg. But then again, if I match nail in this step, all I can do is tell you there is nail here. Be careful. You can be careful, you miss the nails. Sometimes you're not careful enough, you step on nails. There will be pain. I'm getting you prepared for the fact that you will feel pain. There are times when your strategy will have you wait for weeks, and when you take a trade after waiting for 2 weeks, that trade is still going to lose. Now, in that instant, you have a decision to make. You can either step away from the market immediately that happens, and there is nothing on the charts for you to do again, or that is when revenge trading turns off your emotional mechanism, your defense mechanism, your brain defense mechanism. It totally turns it off and you start revenge trading, not knowing you are revenge trading until the repercussions. You understand me? So I need you to understand that you will get there, but there are some battles you might have to conquer on your own. But with advice, with insight, it will be easier for you to conquer them. Do you understand me?
Yeah.
Alright, good. So now moving into the chat very quickly. I'm going to be
Okay.
talking about, you can, let me share my screen quickly. Let me share my screen. Can you see my chat? Can you see my screen?
Not yet. Yes, I can now.
Okay, you can see my chat now.
Very well.
Good. So, what I said was that we'll be looking at DXY. We are going to start with DXY first. Alright. If you see
Okay.
here, if you see here, from the last session we had, alright, I spoke about some things. If you look at this upper right corner, you will see where I wrote price to create some discount period. You can see
Number
these,
three.
right? Yes. We talked about
Yes.
it last time. We
What
talked about it in the
wetin
last.
dey sup with your system? Like e dey echo one kind one.
Okay, it's echoing. Okay, hold on. Let
Yes,
me.
like the sound.
Okay, let me switch. Let me switch my network. Let me see if that's the problem. Let me see if that's the problem. Hold on, please. Okay. How is the reception now? Is it better?
Yes.
You can hear me. It's not echoey anymore, right?
Yes.
Okay. 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 So, like I was saying the last time, uh, this is DXY, which is the dollar index. I don't know if I had talked about this before, but dollar index, if
I'm
I,
not here.
can you hear me?
Yes, yes, yes. Very well.
Okay, can you hear me very well? Okay, good. I don't know if I have talked about DXY before, but let me quickly say it here. You see this dollar index, yeah? Dollar index, whatever it does, there are pairs rather, that correlate with it, either positively or negatively. When I mean positive correlation, I mean if this dollar index DXY is going up, all those pairs will be
Okay.
going up as well. Okay? That is positive correlation. And there are also pairs, alright, that if dollar index is going up, those pairs will be going down. That is called negatively correlated or inversely correlated. Alright?
Yeah.
So, one of those pairs, rather, or let me use a text, one of those pairs that are positively correlated pairs, USD CAD, USD CHF, USD JPY sometimes. What other USD? Let me stop here with just these three examples. Why we have the negatively, okay, negative correlation, not negatively. This DXY means US dollar, US dollar. Now for this, we have GBP USD, Euro USD, NZD USD, and so on. But I'm just going to drop this example. Alright.
Okay.
So I need you to understand that when I say there is a positive correlation on DXY and I mention a pair, that means if dollar is going up, all those pairs or currencies will be going up too. When I say there is a negative correlation, that means if dollar is going up, all those pairs will be going
Mm.
down and vice versa. Do you understand me?
Yeah. Yes.
Good. Now let me put this one up here quickly and talk about the dollar. Now, having said that, let us analyze currently the dollar. Okay. So now, like I like to say, all right, when a trend is bullish or bearish, when a market is trending to a particular direction, every weekly candle will seek to close above the high of the previous candle moving in that direction. Now, if we look at this market over here, let's just look from this white wick. All right, these white candles. As you can see,
Okay.
the price, we talked about open and close. White candles, they open below, right? They open down. Bullish candles open down, they close up. So this is the high, right? Let me take this off. As a matter of fact, take everything off because I already know it in my head. So these are the white candles, okay? So these white candles, these are the weekly highs. Remember, we're on the weekly time frame, as you can see. So
Yeah.
each candle represents Monday to Friday, 5 trading days, okay? If you check this white candle closes here and leaves this wick. The candle that appears after it, which is the next week candle, does not go above it. All right,
Yes.
it closes
Yes.
a kind of small candle. This is a rejection, a morning star, something we used to call it then, but I don't trade candlestick patterns. Now, look at something. What did the next week do? The next week bought and it was bullish. Yes, it closed bullish above here. Now, if you remember when we really started this session, I said something. I said in a trend, markets will seek to close above previous weekly candles high. Let me write it down. In a trend, but I want to write it down in a very short way. Market will seek to close above previous week candle highs in a bullish trend. Or price will seek to close above until until there is a reason to retrace, which is fair value gap, comma, liquidity. Now I will explain this quickly before I move into structure of DXY and structure of GBP USD. I said something. I said in a bullish trend, price will seek to close above previous week candle highs until there is a reason to retrace. Now, if you look here, after price swept this low, rejected, and started buying up, this is the previous candle high of this weekly candle, bullish candle. 2 weeks later, price went above it. All right, it went above it and created its own high. When it created that high, the next week went above it as well. Obviously, over here, as you can see, the next week went above it by closing above. But mind you, when price did this, what do you see price has left behind? What do you see over here, bro? Between these three candles, one, two, three.
Okay. Between these three candles,
Yes, what do you see?
a, a fair value gap.
There is a fair value gap.
Yes.
So price will continue going up until it has created a fair value gap that is an excuse to retrace. A fair value gap is not a 100% surety that price will come back there, but it is an excuse for price to seek premium prices or discount prices. In this case, in a buy scenario, we'll be seeking discount prices. Now remember I set up a Fibonacci for you where we can use to
Yes.
immediately see the 50% and all that. In my opinion, price has currently gotten to 50. Wow. I think we are going to have a bullish DXY tomorrow, Monday, from Monday, as we can see. Price has currently come into the below the 50%, right? That you can see.
Okay.
So we could be going up.
Yes.
Now let us go and look for structure. Remember I said we are looking for these structures on our 4-hour time frame or daily time frame. Now that we know that this market is bullish, but these sales was as a result of this fair value gap was an excuse for price to come back into this fair value gap. So you can see one, two, these two weekly candle that fell. Okay,
Yes.
it was because price left behind the fair value gap. It's coming there to mitigate it and then probably continue. And there is something about fundamental and technical working together. We heard there was a de-escalation in the war going on with Iran and the US, but all of a sudden there is a new escalation because they have closed up the the Strait of Hormuz again. And now, coincidentally, or I don't know if these guys are working with a world map or world blueprint or something. Coincidentally, DXY happens to be in a discounted area where price can seek to buy from. I'll not be surprised if market opens and DXY just pumps. All right, it just pushes up. Okay, that's what we've been waiting for. I've been waiting for this buys to resume for about 2 weeks now because, as you can see, obviously, the market has been selling for the past 1 week, 2 week, 3 weeks, thereabouts. It's been selling.
Yeah.
So I've been waiting for this to resume. Now, what do we see here? If we look at external structures, like I said, all right, in a bullish market, price moves like this, all right, picking external structures. In a bearish market, it moves like this, it goes down, lower high, lower low, right? Good.
Yes.
Now, in this market, if you look at this market currently on DXY, and you draw out these ranges, you will see we're moving from bearish. Okay, you can see we are coming down, 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 and then I'm just picking the external highs. What do we see here?
Okay.
We see that there is a new structure. This one goes above this high. You can see it, right? This high
Yes.
here goes above this high. That tells me on the daily time frame, DXY is bullish. Now, if DXY is bullish, which means DXY should buy, what did I say about all those pairs that are negative in correlation? What will they do?
They will fall.
They'll fall. They will sell, right? And these are some examples: GBP USD, Euro USD, NZD USD. So these pairs are expected to fall by next week. I could have easily been positioned on an aggressive short or an aggressive sell from um from last week before market close. Immediately price was breaking below this low, I was going to short this market. But I remember what happened with um, Trump the last time. I was expecting an escalation and it de-escalated the war. And what happened? DXY fell, oil fell, and I got slipped for about 1 point something percent on a 0.4% stop loss. I was to lose only $100 on that trade, and I was already in a little bit of profit. As the market opened, it gapped up against me. GBP USD gapped up against me because dollar fell, and instead of $100, I lost about $260 in that trade. I was even lucky to lose just 1% because Trump did not issue the de-escalation um, early. All right, markets had already opened by 11 before his deadline. His deadline was 1 o'clock of my time. You understand? So before, or 45 minutes before 1 o'clock, he came online and he said he's no more bombing Iran and he's going to cease fire for 2 weeks. I'm giving you fundamental psychology now. Now, immediately
Yes.
that news dropped, the market continued rallying very dangerously. Now, mind you, I got that spread. I got closed out on market open around 10 or so. Yes, 10, 11 thereabout. And 1 o'clock was the deadline. So 45 minutes before 1 o'clock, Trump de-escalated the market. Before that time, I had already closed the trade. If Trump had dropped that de-escalation news by maybe around 9 of that Sunday night or something, or
Yes.
sorry, it wasn't Sunday. I don't think it was Sunday, but I think it was on a Tuesday or so. If Trump had dropped that news before market close or just by market close, I would have probably lost more than 5% that day. So what am I trying to say? GBP USD is expected to fall with the new rumor of an escalation, because if there's an escalation, if the war continues to go on, we expect DXY to strengthen. All right, basically because uh, DXY strengthens in an escalation, as I have made researches on during war and all that. With the inflation coming in, with war, there is going to be inflation and other economical factors involved. So that kind of strengthens the dollar, because people now tend to remove their money from risk assets like Bitcoin and other stocks. When there is war and anything can happen to the market, you go and look for a currency that, at least, no matter what happens, the currency will always want to protect your money. It's called a safe haven. All right, you will not be liquidated in some kind of way, and the US dollar is a safe haven asset. All right, BTC, being crypto, is a risk asset. So during war like this, US dollar tend to buy, because people now start buying the US dollar to save their currencies, because it is the world power. It is the power nation of the world. US dollar. It is more like the world's country to save their currencies. You get me? So let me not to delve
Yes.
into fundamentals with you. We will get there as time goes on. Let us look at the structure now on the daily time frame. First, on the weekly. I remember I said if you don't have a fair value gap, you don't have a trade yet. So we have a fair value gap on the weekly time frame, as you can see. All right. So when we go down time frame, what are we looking for? We are looking for structure, structure that aligns with this fair value gap. When we go to the delay time frame, we see this bullish structure with price breaking above here. You can see this line, and
Yes.
price, you can see here, price closed above it twice. It closed the first time with this white candle, and it closed the second
Yes.
time with this white candle. So that is a break of structure. But in this case, because we are coming from a bearish scenario, it is a change of character. Remember, we spoke about it in the last video. All right.
Yes. I remember.
Yes, we said when price is shifting from bearish to bullish, that break is a change of character. But when it continues in the trend, that break is a break of structure. It's a continuation. So now we have this this structure on the daily time frame. Let me take out this. We have this origin. The last bearish candle before the move up is usually high demand or high supply in a bearish scenario. But I'm already expecting sales immediately on GU and EU, because price seems to be rejecting from this fair value gap. As you can see, this candle is rejecting. So next week could just continue going up. If that happens, we may not be seeing this price coming back into this area. I remember I said something about a reaction POI and a origin POI. If you remember, I said there are two places
Yeah.
price can bounce off from. Price can either come back to the origin POI and continue, or look for a reaction before the break. Now, before this break happened over here, what the price leave behind? Price left behind this fair value gap. So this fair value gap can be used as a reaction POI before the break. But normally, a reaction POI should look like this over here. When price tries to come into the high, it reacts and then it breaks. This reaction over here is a reaction POI. And if you can see, even this before this high, hold on please, before this high, over here, when price came into this place, then what did it do? It reacted. When it got here, it didn't break. No candle closed above. It just uh, reacted, get some kind of reaction, consolidation, and then it continued. So this is a POI that price can most likely return to. You understand? This reaction,
Yeah.
reaction POI, and that is where we see price currently. We see price on DXY currently reacting from. So now, having seen this on the daily, we are already seeing a reaction. What are we going to do now? We will drop down to the 4-hour time frame. What are we waiting for? We are waiting for a break of structure. We're waiting for a break of structure. As you can see, we had this move up. 1, 2, 3. So we have 3 white candles going up and they all close above each other. So this to me can be a valid retracement. And then we see price break this retracement. You see price break it. Because of that, where are we expecting our break of structure to be? Up here. Okay, so if price can go above here, I will most likely be bullish on the XY and be bearish on everything else. We could see something like this. I tend to be a swinger on this move. I'm not looking to do intraday. I could hold a very long position, probably a week or two, if I get a good entry that rallies on DXY. That means it is going to plunge on GBP USD. GBP USD is going to fall, as you can see here. Euro USD is going to fall. If DXY buys, USD CAD and all these pairs will go up with DXY, and GBP USD and all these pairs will go down as DXY goes up. So let me use this method to help you see the structure appropriately every time I am talking about um, structure. Now there is something I call the 3-box methodology. Okay, 3-box methodology. I learned this from Ment FX, something 2022, somewhere in 2022. Yes, I learned that. That was my system in 2022, 2022 stroke 2023 thereabout. So what is this 3-box methodology? When you map out the origin, okay, you take another box from the low of that
Yeah.
range, okay, to the high of the range, you take another box, okay, and then if you have a reaction POI, you take a different color of box and you put it there and you wait. As you can see, it's very easy to see this now. Okay,
Yeah.
what you are currently seeing is this in motion. What you are seeing right now is this structure. Okay, this structure over here is this in a box format, but easier for you to see. It's just something like this, with the origin over here. This is what I need you to be doing now. You'll be drawing out your structure in origin, just that is the demand zone, and if you have a reaction POI, you put out your reaction POI as well. Sometimes there is no reaction, so the origin is what price falls to. So now, seeing this, and we see price reacting from this reaction on the daily time frame, what are we going to be waiting for? We'll be waiting for a shift on the 1 hour time frame. Now remember I told you there are only two ways price can change character. Okay? I mentioned there are only two ways price can change character. Price can change character by, let me use a bullish scenario this time around. Price can change character from bearish to bullish by doing a type 1 break, which means you have a break of structure, then you have a direct change of character, then we have a continuation. Okay, this is one way price can change structure. And then we have the type 2, from bearish to bullish. Price can break, try to break, but will not break because there is no much energy to break. Tries to break, couldn't break, and then it switches. It will shift here, and then character will change here because this was the last valid break of structure. Now, this area before that break is either a strong demand or a strong liquidity, which means price can either come here, tap into it, and not sweep this low. Nothing, no demon on it. We have price coming below this low and continue higher. Or what price can also do, oh, control Y, is price can sweep this low. All right, come below here and then go above, but nothing touches this change of character. You understand? This low, I mean, nothing touches this low.
Yes.
So price can, this is type 2, okay? This is type 2. This is the second way price can change character. Price can either take, so what do I like to do? That area that I am supposed to enter here, I make sure I calculate my stop loss. I draw, instead of just drawing my POI like this, I draw the entire thing.
Okay.
I draw the entire thing, and then I calculate what 50%. I take 50%. I treat everything from the area where I expect this place to buy to the low of the external low. I calculate um my stop loss, and then I either take everything or I take the 50% of it, such that if price, okay, will come to sweep this low, I will still be in the trade, and that is when I'll be getting triggered. This sweep is what price mostly does 7 out of 10 times. Very few times does price really respect this as strong demand, but when it does respect it, it never comes back. It tags it once and it pushes up. Okay, so I treat it this way. This is how I enter. So that is the two types of change of character. Now, judging by that example or illustration that I just did now, what do we see going on over here with DXY? With DXY, this is a 1 hour break of structure over here. We see price break down here, and here we don't see a close. Oh, it closed beneath it actually, I guess. Yes, we close beneath it. This is also a break of structure. We see a close over here as well on the 1 hour time frame. And then what will we be expecting from these eyes? Be expecting a change of character. It will be very heartbreaking to see that the market opens due to the escalation and price just gaps up like this. Like price just pushes without giving us, we that we have been waiting for the buy to resume, an opportunity to engage. There will definitely be other opportunities, but it will be heartbreaking to see price just move like this, because I was expecting something really soft and gentle on Monday, maybe a break and then a retracement, maybe small consolidation, but this low remains protected and price moves up. That was what I was protecting. But if market opens and price does this, bah, by leaving a big, you see this area, there's no candle inside this place.
Yes. Yes.
This is
I
called,
want. I want to ask you why have it in line.
it's called a
Like
gap.
you.
Yeah, there was a news, something happened there. Is it that Trump came out to say something again that okay, I'm not fighting this war again. and the market is going to interpret that as a de-escalation. So price will move very fast. There will be no time to print candle, but price wants to get to that price. You see this area, if you trace this my line to this place, you can see there.
Yes.
Oh wow, my PC is low. Let me put on. Okay,
Okay.
so if you trace this line, you will see that this place is showing 99.499, 99.48 other
Yeah.
prices. If you trace the line, so when a gap happens, price quickly wants to change prices from maybe 99 to quickly just get to 98. Because of that, you need time to print candles. There's no time to print all those candles, so the price just jumps without printing a candle. So what price can do is later on, price can come back to print a candle into that place. And that is also why this gap is also another reason why I expect some buys into this gap. If price actually does buy into this gap and I am positioned in a way whereby I hold it into this gap, that is a pretty solid position and profit for me. You understand? So
Yes.
that is called a market gap. It happens when there is a fast movement of price where there is no time to print candle, but price just wants to get to where it wants to get to. So you get. So what am I waiting for on DXY? Like I said here, I'm waiting for a breakup. If that happens, hopefully it happens softly and I can get an entry to follow through. And that is that about DXY. If you look at DXY now from this 4 hour time frame, you can already see your structure range. This is your high, your low, your origin, your reaction. You can already see it like this just by looking at, without looking at all this choppiness. All right, you can already see your structural range. I hope you get that. Now let us go to Euro USD and make an example of that analysis. As you can see, if you go on Euro USD, it is the same thing, just upside down. As you can see, a break of structure up and then price change character. So if we are to draw um our structural range, it is going to be this. Last bullish candle before the bearish move is going to be this. And then we have this break here. This is a reaction. This is a reaction. This is a reaction. On the weekly, we could have something clean. This is the fair value gap. All right. So we can see price is reacting from. This is the second candle of the fair value gap, so it is still valid by two candle rejection. So you can already see this, and look at this Fibonacci. Price has gone above the 50%, obviously, right? From this high on the
Yeah.
daily time frame. So what we are looking for now, we can be looking for what? For sales, for movement downward. Okay, that is the daily time frame. This is the structure. If you go to the 4 hour time frame, very simple. This thing can just keep you in the trade so that you can have a memory of your trend of what you are currently in. On the 4 hour time frame, what are we waiting for? We are waiting for this exact thing that played out on the daily. We are waiting for it on the 4 hour and 1 hour time frame. So we see this break of structure. Price breaks up, closes, and now it has broken down on Euro USD. You can see it's closed below this low. Let me go to the 1 hour time frame so you see that properly. As you can see, it closed below this low. If I'll be looking to engage in this market, it would be in this area. I would love for price to probably provide this premium price for me to get into. All right. I've been seeing this change of character. I can either take an aggressive entry here, aggressive in the sense that I'm not going to wait for any 15-minute shift or anything. I just want to see price come into here, tag me, and move lower. Okay. So I will be keeping you updated every step of the way on this journey, on this particular trade setup and week, because this could be the start of a bearish move, just like this one that has been coming down like this. Okay, we see it start to go up. We can see price now start to come down for a long probably in the next week, 2 weeks, 3 weeks again, just like this move was from January to March. From here to here, 3 months. All right, so we could see a movement from probably from March, or this is April rather, from April to probably June, July, or something. You understand me? If this actually continues the downtrend. So what you have to do now is when you go to different charts, when you see your structure, you have been able to identify the break. The break of structure is the continuous movement upwards. That break to move upward is the break. When price comes below the low of that break of structure, how do you get a break of structure? Price created this high, it broke above. Then you mark this high and you mark the area where it break. The lowest low in that area is should be the protected low. Okay, it is not protected when price closes below, and if price closes below, it becomes a change of character, and that is what happened on the daily time frame, as you can see. So what I'm waiting for, like I said, the same thing. If you look at this on the 1 hour time frame, you can see price. Let me mark it out with this. So you can see by price on the 1 hour time frame, right? It has been going up like this. Abi,
Yeah.
so you can see it up. It's going higher, higher, higher. But now it has broken lower. All right, it has broken lower than this last low. Okay. So what can we expect to see? We could continuously see something like this. Okay, maybe some momentarily breakups and continue, because that's how price does, and continuous move down. Do you understand me? So this is basically what we're waiting for. I want you to, when you get this video, I'm going to be very quick with it. That's why I don't want it to be very long. I'm going to compress it, edit it, and make it available out there. When you get it, download it, go through it again, and then when you understand it, mark out your own chart like my own, so that you can consistently be seeing what I'm seeing. Okay? You don't need to put everything. You don't need to put this parabolic, this parallel trend line. You don't need that. But you see these boxes, use it to mark out your structure. Once you see a structural break, mark it from the high of the box to the low of the range. Then you mark out the last opposing candle before that move down, which means this market was buying, right? Then it started selling. So you are looking for the last white candle before it started selling. Once you get that, that's your demand on the daily time frame or 4 hour time frame. Right here is demand. If I want to refine, right here is also demand. Okay, and that is basically it. If we keep on holding this short session consistently, and we are watching price play out together, you know, you will now get accustomed to how the market moves without having to go through that beginner rudiment of learning lower high, lower low, and all those beginner things. You know, I'm trying to fast forward your process from going to learn a lot of baby pips knowledge, a lot of basic knowledge, you understand, to fast forwarding you to what really matters. And one of the things I cannot fast forward is emotional and psychological uh, trading and involvement in this market, which is what I started the video with. But I'll be here when that starts to happen. I'll be here to counsel you, to push you through. It should not be a problem, because if you stick to rules, do what needs to be done, your emotions should not be able to toil with your trading and your system. Do you understand me? So
Yeah.
basically, that's it for this market. Just EU and DXY. On GBP USD, I'm waiting for the same thing. It's just that GBP USD has a much more uh, inappropriate structure to DXY than Euro USD. It is not totally shifting appropriately. But I understand that if DXY starts buying, definitely GBP USD is going to sell off as well. And by then, it will catch up with a trend and start producing appropriate structure, I believe. So that's going to be all I want to talk about today. I believe you have um the market structure video I sent to you last time. If you come across
I see.
some difficulty or some misunderstanding, you can always go back to it to watch it, understand it, and then you can come back to me to re-explain what it is that you do not understand. I hope you are getting me.
Very well.
All right. So, do you have any questions or any
Yeah.
misunderstanding?
No, not,
Do you have any
good. Not
questions?
good.
You can feel free to ask. I'll be glad to talk about it.
Not for now. Wow.
Okay, not for now. All right. So when you go through your study session and you come up with
Yes.
anything that misaligns with what I have said or misaligns with
Yes.
what you have understood or you misinterpret some understanding, you are very free to let me know. Okay, I'll be here to
Okay.
always give you a heads up. All right, bro.
All right.
All right,
Thank you
now
so much.
do have a nice day. Okay. All right,
You too.
take care of yourself. Yeah.